Hey, I'm Dan Fitzpatrick at Stock Market Mentor still. I want to look at Kirkland's today. This is just a real quick video. We have a situation here where the stock was in a squeeze. If you look at the Bollinger Band width, it's 16% wide. They don't fit the definition, the Bollinger Band definition of a squeeze by a long way. I typically look at 6%, maybe even less for a real squeeze. But this stock doesn't trade that way. It just doesn't give you that tight of pattern. And so what I do, I just kind of have my eyes trained this way, not deliberately. It's just because I've been looking at more than 3 or 4 charts. And this is what I see. If you see these rising lows and either a flat top, and a lot of times you'll see a downtrending one. You guys have seen a bazillion of these. Then what happens is it ultimately looks like the stock is pinching. It's just pinching, and then I guess it's an homage to all the young kids who still have acne. I call it a pinch and pop, where the stock squeezes here in converging highs and lows. It's a flat top. This is good because you know exactly where supply is on this stock. You say, all right, well, where's all the selling? All right, well, the selling is right here. How do we know this? Because every time the stock gets up there, it sells off. Gets up here, it doesn't go any further, it sells off. Gets up here, doesn't go any further, it sells off. Gets up here yesterday, and then today it breaks out. Okay, that's different. And so once it does that, then this red, this red line suddenly becomes green. I'll take this thing off. Suddenly this red line becomes green because, for one thing, the stock didn't run that much before it broke out, but also now those that had sold here this is all theoretical, we don't take a poll, but those that had sold here at 30, and also those that had thought that they would be able to buy it lower, once the stock breaks out, there's kind of a little panic buying. And that's why you'll see a stock squirt out to the upside here. And that's why you see this stock had a lot of volume today, So I like this. There were several stocks that kind of broke out today, but then failed. A lot of, what I call gap and craps. You don't want to be in one of those. But this is a stock that's still going. And, you look at the weekly chart and you can see this, this has a lot of room to go in it. So I would look to be, you can't really buy it up here prudently. The stock has run 20% just in a matter of a week or so. And so it's kind of hard to buy it right here. However, this breakout does kind of have some juice. So if you were to start a position up here, that would be fine, but you just start a position, and the idea of just starting a position is, I think that the stock, if it pulls back, it will find support here, and then it would ultimately run higher. But I don't know that. You could see the stock just continue to go and not pull back until a higher level, and then come back and, not really give you much of a chance to get in. So I say split the difference. You take a little bit of stock right here, and then if the stock pulls back, sorry, I'm really sloppy on this today. If the stock pulls back to this level, then you buy some more, and then your cost basis is somewhere right in the middle, closer to the breakout, and that works. So don't gamble, trade. Have a reason for doing what you're doing. And just make sure the reason is not because you want to get in on the action or something. If you want to do that, go to Vegas and go to the craps table where they got a real hot roller, then you can do that. But here, you want to be all about risk of missing out on profits versus the risk of loss. Got to know how to balance the two, okay? All right, see you guys next time.